Welcome to our exploration of the current economic landscape in Europe and Denmark. Europe is currently facing significant economic turbulence, marked by rising inflation and interest rates that challenge both national economies and everyday lives. Denmark, known for its robust welfare state and strong economic policies, is not immune to these challenges. As the rest of Europe grapples with similar issues, Denmark serves as a critical lens through which to view the broader economic crisis. Inflation, a term often heard but not always fully understood, is particularly high in Denmark, influencing everything from grocery prices to housing costs. This economic strain is part of a larger pattern affecting many European countries, driven by various global and local factors including geopolitical tensions and supply chain disruptions. Denmark's situation highlights the interconnected nature of economic challenges in Europe. The focus on Denmark is pertinent, not only because of its economic significance in Europe, but also due to its unique position in global trade and economic policies. Understanding Denmark's response to these economic challenges can provide insights into potential paths forward for other nations facing similar difficulties. Let's delve into some key economic terms: inflation, stagflation, and rising interest rates. Inflation is essentially the rate at which the general level of prices for goods and services rises, eroding purchasing power. For ordinary citizens, this means what you could buy yesterday costs more today. Stagflation, a less common term, refers to the peculiar combination of high inflation and stagnant economic growth, along with high unemployment. It's a troubling scenario because traditional economic policies that combat inflation can often exacerbate unemployment. Currently, Denmark, like many European nations, is experiencing these economic phenomena. High interest rates, which are often used by central banks to control inflation, mean higher costs for borrowing money. This can affect everything from mortgages to business loans, tightening the economic environment. For a small, open economy like Denmark, these factors complicate both domestic and international economic strategies. In practical terms, rising interest rates aim to reduce spending and slow inflation, but they also increase the cost of borrowing. For businesses and consumers alike, this can lead to decreased investment and consumption, potentially slowing the economy further. Understanding these dynamics is crucial for grasping why Denmark's current economic situation feels so precarious. Let's consider the practical effects of inflation and higher interest rates, which are widely felt across Denmark. From the cost of a loaf of bread to the monthly mortgage payment, Danes are feeling the pinch. These rising costs not only affect individual budgets, but also influence broader consumer behavior, which in turn impacts local businesses and the overall economy. Furthermore, the economic strain extends to the job market. With companies facing higher costs, hiring may slow, which can exacerbate the issue of unemployment. This creates a cycle where less spending leads to fewer jobs, which in turn leads to even less spending. It's a challenging cycle to break without strategic economic interventions. On a broader scale, inflation impacts governmental budgets as well. Increased costs for public projects and social services strain the welfare systems that many Danes rely on. This can lead to difficult decisions about where to allocate limited resources, affecting everything from healthcare to education. Section 4. Combating the crisis, strategies and measures in Denmark. To address these economic challenges, Denmark has implemented a range of policies aimed at stabilizing the economy and supporting citizens. These include targeted subsidies for essential goods and services to help offset the impact of inflation on the most vulnerable populations. Additionally, Denmark is investing in green energy projects to reduce its reliance on imported energy, which is a significant factor in the current inflationary trend. The Danish government is also working with local businesses to find ways to increase productivity without significant price increases. This includes tax reliefs and incentives for businesses that invest in local economies and job creation. Moreover, there's a concerted effort to enhance export capabilities, which could help balance the trade deficit and strengthen the Danish economy in the long term. Lastly, public communication and education about economic policies are being prioritized to ensure citizens understand the measures being taken and how they can contribute to a more stable economic environment. This transparency is crucial for maintaining trust and cooperation between the government and its citizens in these trying times. Section 5. Conclusion: a hopeful horizon. Despite the current economic hardships, there is a path forward. The resilience of the Danish economy and the proactive measures being taken are grounds for optimism. By understanding the economic terms and their effects, citizens and policymakers alike can navigate these challenges more effectively. The spirit of community and shared responsibility in Denmark is a powerful force. As the government and citizens continue to work together, there's every reason to hope that Denmark will emerge from this economic crunch stronger and more unified. The journey might be tough, but the destination, a stable and prosperous economy, is well worth the effort. Thank you for watching our video. Give our like button a mega like and subscribe to our YouTube channel for more videos about finance.